It's time for a triple play. Three stocks that we're watching in the final 30 minutes of trading. We've got DoorDash, crude oil, and Deere. Let's kick it off with DoorDash. Shares erasing that initial pop after analysts weighing in on the company's quarterly results. You're looking at losses of nearly 8% today. The takeaway, a number seemed to be pretty worried about the risk of a difficult macroeconomic environment and what that could do for future food delivery demand, despite those strong numbers that they just reported. So UBS noting that the chance of a, quote, softer consumer materializing in the second half of the year is a real risk here, while Citi also said that it's waiting for more details on current demand trends. For its most recent quarter, DoorDash posted revenue that beat the street's estimates and authorized a buyback of up to $750 million worth of shares. The stock initially popping on the heels of that news. But Jared, at least for today's reaction, doesn't seem like the street is bought in yet.
No, and I'm looking at the longer term chart here on the Wi-Fi Interactive, and it's a slightly worse story here. And you can see, even though we are seeing some positive momentum this year, still down 68% over the last 2 years. To be fair, most of the charts in this sector, I mean, we can pull up Uber. Uber is not going to look a whole lot better, but you can see at least it's not that huge steep decline that we saw over there. But I will say this. I'm going to sort by performance here and just show you what's happened on a year-to-date basis. Dash is hanging in there. They're up 26%, hanging in there with Uber and the likes of Just Eat Takeaway. And then you take a look at Lyft. Well, they just had a really dour earnings performance, and they're right back down by their lows.